Hello! Are analyst targets a leading or lagging indicator of actual stock performance? In this video, I address this question with an example of a company that has been very volatile this year, the Amsterdam listed Adyen. I am Jimmy Lepping, a psychologist and statistician with loads of interest in a variety of research topics, including the financial markets, and since a month and a half ago, I also have my own YouTube channel. So here you see a chart of the weekly close of Adyen listed on the Dutch Large Cap Index, also called AEX, over the past 52 weeks, so about a year. The three analysts that I include here are analysts who gave a price target in the first 2 weeks of December last year and have since updated that target several times. This company took a historic dive mid-August, when on the 16th of August it closed nearly 39% lower than the day before. Historically speaking, there have been very few incidents like this in the Dutch Large Cap Index, and yet this move makes this stock interesting for the kind of analysis I am showing. Because a few weeks ago, I addressed this question of analyst targets as leading versus a lagging indicator of actual stock performance, using companies that, well, have had different patterns, up, down, sideways, and more or less volatile, but no company that at some point took a dive from one day to the next of 15% or more, let alone a dive of nearly 39%. And yet, this case study is important because quite some people use analyst targets when making investment decisions. And from that perspective, if analyst targets are a leading indicator of actual performance, then investors may have useful information. However, as this picture shows, big drops in analyst targets followed either in the same week as the dive or a week later, which is like driving a car on the highway looking through the rear mirror, so basically back, to see if there are holes in the road ahead. Interestingly, we do see that City Research gave a target about a year ago that is not far off from today's close, that of Friday 8th of December, because Adyen closed only about 5.5% above the target provided by City Research a year ago. This is quite accurate because, as I showed in earlier videos, analyst targets tend to be, well, about 19 to 20% higher than where the stock is about a year later, which is the same as to say that stocks on average underperform by 16 to 17% relative to the average target. Here you also see that the analysts, the targets provided by Morgan Stanley and Jefferies a year ago have turned out way too optimistic. But well, I certainly assume that each analyst has taken a very careful look at the limited information at hand and has worked under somewhat different assumptions, coming to different results. This probably indicates how difficult the job of analyst is, trying to look 1 year ahead with information that can and will be updated one or several times in that 1 year time window. And here you see the so-called cross-correlation function for the weekly close versus each of the analyst targets, with higher correlations on the left indicating that the weekly close is a leading indicator of analyst targets, and therefore analyst targets are a lagging indicator of the weekly close, whereas higher correlations on the right indicate that the weekly close is a lagging indicator of analyst targets, and thus analyst targets are a leading indicator of the weekly close. We see that the function is very similar for the three analysts, with a peak at either like -1 or like 0. Like 0 indicates that changes in weekly close and changes in analyst targets tend to occur in the same week and tend to go in the same direction, because here the correlation is positive, whereas lag -1 indicates that changes in the weekly close tend to occur in the week before the analyst targets are changed. Note that this video is by no means a critique towards any of the analysts included in this video or towards any other analysts providing such targets. I simply want to illustrate that even analysts who we can assume have delivered targets to the best of their knowledge and experience, while the job of an analyst is difficult and targets are therefore not to be seen as some kind of magical number that nicely indicates where a stock will be in a year from now. Okay, that's it for this video. I hope you find this useful, and if you have any ideas or suggestions for future videos, as always, you can leave a comment below this video or just drop an email using the email address that I have shared below this video. Thank you for listening, have a good day, and see you soon.